Hello, I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management, and welcome to today's Smart Investing Daily Briefing. Well, today we're talking about millennials moving out. They're finally moving out of the house there. That includes you.
I know.
What's amazing, 26% have returned home, and this is the highest in decades. It's this trend that keeps going, and you think it's not going to change, but there is some good signs showing that, yes, it is changing. Look at this. 35% of home buyers in 2015 are millennials. So they're kind of growing up a little bit.
Yeah, and big surprise here, their favorite destination, suburbs. So everyone kind of thinks millennials are different, but they are out there, as we talked about before, buying cars, moving to the suburbs. And why are they able to move out? Because they actually saved up while they lived at home and actually paid down their student debt. So now they're ready to take on a little more debt, which is known as a mortgage. Yes. So very exciting to see there, and kind of find the article we read talked about millennials are getting older, so of course they want to get out of the house. You don't want to be 30 years old and still living at home.
Although I know some girls do date guys and they're like, yeah, he's still living at home at 30 years old. What's happening here? All right, the company for today is Panera Bread, symbol PNRA. We see current price around $213, the high $220, pushing close to that, the low $165. You can see since 2012, a lot of movements here. But is it a good? And I like eating Panera Bread. I mean, Panera Bread is one of my favorite restaurants. I go there and so forth. We see the numbers. Well, sales are up year over year, 5.7%, looking pretty good. But I didn't like seeing earnings down 3.8%. And also, I want to point out that this is positive, but you got to understand these numbers. Shares in 2012 were 29.2 million. They are buying back their stock because now it's only 25.8. So that pie, there's less people with their hands in the pie, so each person gets more.
But kind of this is also negative after we took a look at the balance sheet, because right now debt to equity stands at 97%, which has actually come up. Equity has gone down $200 million over the past 2 years, and also 2 years ago, no debt on the balance sheet. Yeah. So what this tells me is with equity reducing and debt increasing, they're probably borrowing some to buy back that stock. And you know, I think it's important. I like when companies buy back their stock. Right. However, when it's a company like Panera, and I think they're a little overpriced, I don't like to see that stock buyback as much. Always important to understand those stock buybacks. And then also kind of taking a look at their earnings per share. I thought this was interesting. Back in 2013, it was $6.85. 2015, $5.81. And then going out to 2017, $7.81. So even though they've bought back all this stock, they're barely off 2013 levels, about $1 more. Kind of thought that was interesting. That gives us a target price, though, using the 2017 numbers of $128.87. So again, extremely overvalued. Don't really like these stock buybacks at these levels.
And I hope you realize, I mean, that's why it's so important with these numbers. Because again, you look at the chart, you can see it's going up, but the numbers are saying there could be problems down the road. So that's why I tell you, digging in these financial statements, it doesn't mean tomorrow Panera Bread's going to go down, but it means look at these numbers, they appear to be having some problems going forward. So let me ask you, are you happy with the return on your investments? Maybe not happy with your current advisor because he doesn't look at the numbers. Well, maybe it's time you gave us a call and discussed your investments. We love talking about investments. We've been managing money successfully for over 30 years.
Yeah, phone number here is 858-546-4306, or you can contact us at our website, smartinvesting2000.com.